YouTube channel, Farnoosh. Lately, we've just started to see YouTube's algorithm starting to send people our way, which is pretty damn exciting.
Everything, because I started to YouTube. Well, I've had YouTube forever, but I really didn't populate it until May.
That's right.
And yeah, let me tell you, it's been a bit of a slow burn. I put in a lot of effort into these videos, and like 8 people see them. It's great.
That's me. I keep thinking, I'm like, okay, maybe I need to learn what's going on. Like, I need a YouTube course. Stop your podcasting course, Farnoosh, and create a YouTube course so I can take it.
Well, when I get to the learnings, I will do that. I haven't learned. I'm the one who's like watching it. Like, I actually have a bunch of notes on, like, I know what you have to do. I'm just lazy. I don't want to do it. I don't want to hire anyone to do it. I just want to be discovered. I want to make a viral video like by accident. Is that so much to ask?
Let's just get some cats, have them go around, and Farnoosh will be find the
2-year-old, feed her some lines, edit it, and then she's got a Disney show. And
how hard can it be?
I know how these things work.
Listen,
it's a formula.
Chris Hardwick, who has that show, I think it's called Idiot now, but it was, The Nerdist. He talked about how when he was making videos, he would get frustrated by these people with cat videos that would get like 11 million views, and he would only get like 250,000.
Oh,
yes, and it would really bother the hell out of him. But then he did say so. There was my eye roll as well when that happened. You like this? Can you hear that? So
someone's invading your house. If you just want to, just letting you know.
Yeah. Somebody's like knocking on the door. I had my eye roll moment as well, and but then he said something that was really inspirational. He actually said, getting discovered for one video is magic, like lightning in the bottle. The true measure of whether you're doing well or not is if you can sustain that, right? If you can continually do something over and over and over, not like have one hilarious thing. So
that's a high bar. This is why I'm never going to be successful. It's because I don't think like that. I don't think like, I only got 250,000 views. I wish I had 11 million, or I wish I could do that every day. Like,
because I always think if I could just be Farnoosh Torabi, like my life would be.
Or if I could just be Chris Hardwick. I mean, there's always another level, right? There's always another floor.
And Chris Hardwick is sitting there going, if I could be Joe Rogan.
Right.
If I could just be Joe Rogan.
Right. And Joe Rogan's like, if I could just be God. That's basically what he's saying. If I could be God.
Joe Rogan's saying, if I can have all this money and get rid of Spotify, that'd be fantastic.
It's amazing how much Spotify is investing in the podcast space. It accounts for all of 2% of my podcast.
Is it really that small?
Drive. Yeah. Everyone is on an Apple product. When I look at my statistics, it's like literally everybody is on an Apple device listening to So Money, and then 2% are on Spotify.
Apple fan club. Spotify just passed Stitcher for number 2 for us.
Yeah, I saw that.
Stitcher for number 2. All right, you ready to make some shows?
Eric's hanging out with us. Let's do it.
Hey, Eric, we've got a few people with us. Hey, guys, Farnoosh and I are about to make 2 episodes of Money with Friends. They're going to be for tomorrow and Friday. So please comment like Eric did. Although I'm not sure I want to pop the Pornhub IPO on the screen there. We if you have anything on these 2, bring it. All right, here we go. On today's show, it's a huge week for initial public offerings. For those of you new to our Let's Make Every Financial Term an Obscure Thing game, we call initial public offerings IPOs. Should you invest in IPOs? What does IPO even mean? Today, we're talking DoorDash, Airbnb, and more with the host of the So Money podcast, Farnoosh Torabi, on today's Money with Friends. Welcome back to the Money with Friends podcast, coming to you live from my mom's half-finished basement in Texarkana, Texas, where we're working on Mom's house. I'm Joe Saul-Sehy.
I'm Farnoosh Torabi, host of So Money.
Coming to you from
Montclair, New Jersey, y'all.
Fantastic. This is the podcast where Farnoosh and I are going to cover a recent story ripped from the financial press. Today, we're tackling one all about companies in the news. Not only do we read over them like some podcasts, we're going to dive into how this affects your wallet and what you can do to invest more effectively. That's not enough. Farnoosh and I are going to share a big idea at the end of the show that you can take with you to be better with money. We'll do that in about 20 minutes. Today's show is brought to you by NordPass. We lock passwords, you hold the key. Store passwords in a single place. Log into your favorite websites and apps with just one click. With NordPass, access your login credentials on any device, even when you're offline. Download it for free and get the free trial at nordpass.com/MWF. That's nordpass.com/MWF. Farnoosh is with us today. When this goes out live on audio, happy Thursday.
Thanks. Thursdays are my favorite day of the week, by the way.
Thursday is?
Of course, Saturday, Sunday, Friday. Well, it's like my fourth favorite day of the week.
Mine's the favorite because if I make it to Thursday happy hour, I know that Friday's just
the weekend has started. Well, in college, we had like a lot of us didn't have class Friday mornings. So Thursday night, or even, you try to get it so you didn't have class on Fridays at all.
And then Thursday
night was just basically your 4-day weekend starting.
Do you still? Because I do. I get upset. Like, I'm okay with working Friday afternoon, doing what I want to do. But if somebody schedules a meeting for Friday afternoon, I'm not unhappy. I am upset.
Yeah, I am sad for that person who did that, who thought that was okay.
What kind of life are you living? Right. Well, today we're going to talk about two companies in the news. DoorDash yesterday had their IPO. Airbnb on tap today. What's an IPO? Should you get involved in the hype? Man, lots of headlines around this. Let's see which one of our friends is going to help us kick this off. All right, today's piece comes to us from MSN Money. It's written by Ty Kim. Welcome, DoorDash and Airbnb, the $80 billion duo. The market for technology, initial public offerings, Ty writes, continues to sizzle. This month is on track to set an all-time record for money raised through U.S. IPOs, capping off what already has been a record year, with companies attracting $156 billion from investors, according to data compiled by Bloomberg. Now, just to pull the curtain back a little bit, DoorDash's IPO just started as we're recording this, so we're not going to talk about how DoorDash did. We also don't know yet what price Airbnb is going to fetch when they open. But Farnoosh, I know you well enough to know you were on top of this. You were worried about it. You've got all the family money. You're thinking about maybe selling one or both of your kids so that you can buy more DoorDash. True or false?
DoorDash. Yes. How did you know that? No, I sense the sarcasm. No, it's interesting. You were like, we're going to talk about Airbnb and DoorDash. And I was like, I don't understand what's going on, because that's how much I follow market news. Of course, I used to do this a lot in my previous life. I covered the market. I interviewed CEOs. I had a show with Jim Cramer. Like, it was my job to follow stocks. And I have to say, I'm really happy that is the past, because it's nerve-wracking. And also, I know enough now, and and I think our listeners know that it's like following your sports, but it's not like really like it doesn't impact your life. And it's not the kind of investment news that I recommend acting on. I don't really recommend acting on any like headline, right, when it comes to your long-term financial health. But it is fun to watch these companies since we've kind of grown up with them. Like, I remember Airbnb launching in the last recession. DoorDash is also a relatively new company. And so it's always kind of interesting to see these companies that we all use to sort of get to the next level and follow that part of the story and that narrative. But to think that, okay, what does this mean for me? Or how do I bank on this, I think is not the right pivot.
Well, but there's a disconnect here then, right? And let's maybe work through this with people, because if you look at headlines the last few days, including our hot headline today, Farnoosh, this is all anybody's talking about. So if you're saying that you're not following it and you're commenting on this stuff all the time, what's the disconnect? Why are there so many headlines? Why is it so hot? Why do people love it? Why has it got over $150 billion of other people's money if you're not paying any attention?
Well, it matters. There's a trickle down effect, right? And look, CNBC, last I checked, is like a 24-hour channel, so they need to fill up their channels, and it's newsworthy in that there is a narrative here. It's an interesting story. We like to learn about companies that succeed and why. And Airbnb, you could have predicted in the pandemic would have not IPO'd, and yet they are. So that's interesting from a sort of a journey story perspective, analysis, business case. And so it's worthy of headlines, but I think the personal finance angle is really not there for me and never has been, as far as like, what should I do about this? But that said, these stocks, once they become stocks, and DoorDash is already a stock, Airbnb will be one soon, imminently, those will show up in our portfolios at some point within a fund, within an index fund or a mutual fund. So it's not like it's irrelevant. We will passively benefit or not benefit from their growth or lack thereof. So it matters, but it's not to the extent where I'm like, okay, here's how you play this headline. Here's the move. Here's the stock play. Of course, there are people who do that. I'm not one of those people. I don't prescribe to that sort of advice. I think that's, I'm just actually writing a piece about Robinhood, and I recently bought
my favorite topic
stock, but I'm like, look, I'm not a stock picker. I bought the stock while in the Party City store. I was inhaling helium. I did it. And, I made some money, but this is not my retirement portfolio. This is literally money that I was ready to flush down the toilet, because that's what I think of when I think of stock picking. It's like, you have to take that risk. If you lose the money, shame on you.
So there's no truth to the rumor that you bought Party City while high on helium.
What?
Okay. Let me ask you. Let me ask you this, which is, if somebody wants to get in on these, Farnoosh, and they want to, and they go, you know what, I can finally invest in Airbnb, or I can put some money. I like these companies. I want to get in.
Sure.
How do you recommend them people do that, or do you tell them to wait?
No, I mean, look, I think that you could wait or you could not. It's not about the timing for me. It's about the how you do it in terms of like, okay, if you're going to buy Airbnb, whether you buy the whole share or a bunch of shares, or now you can do stock slices. I know Charles Schwab is offering stock slices. Robinhood, you can also buy a fraction of a stock if it's really expensive, but you want to feel like you're riding along that journey. But I would say diversify it. So don't just pick one stock, but maybe if you've got a budget of a few $1,000s or a few $100s, that you're jam packing that with as many different types of stocks as possible. That diversification helps in terms of just your risk exposure and your potential for high volatility. So I remember I wrote a book about, managing your money in your 20s. Millennials are really hot on investing right now. Robinhood has definitely cornered that market. The pandemic has made us really bored and interested in investing. And it's become a lot more accessible. You can do it for free, no commission, all the things. So I have to recognize that, right? I can't be like ignoring, all those millions of people that are doing this. So if you're doing it, take this advice. Do it with a diversified approach. Combine the Airbnb with the DoorDash with the 8 other stocks or parts of stocks, and create your own fund, more or less. But at the same time, recognize that these types of picks that you're buying, usually in a taxable account, right? It's not as beneficial, say, as like a Roth IRA or a 401k, where you're getting some tax provisions, you're getting diversification, you're getting auto rebalancing in some cases. You're not getting any of that when you're just hand cherry picking these stocks on your own. And, it is what it is. So it is what it is. Just be, if you're going to try to be a little bit smarter about it, diversify, don't trade every day, buy and hold. Follow them, and like a sports team. And my brother bought Party City, and for us, we sort of joke about it on text, like we're totally retiring, on the Party City stock, man, dude. It's $5 now. We bought it at $1.80. How smart are we?
How come you didn't put everything in it?
Well,
refinance the house, back up the truck.
Exactly. I'm selling my plasma as we speak to invest more in Party
Just
City.
to throw it into your Robinhood account
All of
and buy
it.
more. Yes.
Making Robinhood very rich by the end of the week.
You know, some misconceptions, Farnoosh, when I was a financial planner and people would come to me and ask, hey, I want to get in on this. A couple that I'd warn people about are, number one, when people hear about day one, right? So by the time this goes live, there's a good chance that DoorDash started at X price and is already up a ton. You know, a ton is the technical term. And so the media is going to report that number and people are going to go, oh, I could have had that. All I had to do was get in on day one. The bad news is unless you're an insider that had the shares ahead of time, if you look at how these things work, most of that gain happens even before the open. There's just so much pressure. So by the time my retail clients could get any of that, if they wouldn't take my advice and said, yeah, let's do it anyway. Cause I was like, you know what, let's just let the fund manager buy it. Let the index buy it. Let's not play this game. But if they still wanted to buy some, and we did, we never got that return. And I remember people, even after I would explain it to them, you would hear, it was like me with my mom, Farnoosh. You know, my mom would always say that all I heard was the Peanuts teacher, the wow, 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 wow. I felt like I'd say, well, you know what? You're not going to get that price. And my client would go like this, And they go, well, let's go buy some. And then the next day we're on the phone and they go, how come I didn't make, why is the newspaper reporting that all these people are making all this big money and I didn't make any? I totally made none. And I said, well, I explained that to you yesterday.
Yeah. Well, we have what's called recency bias. We look at how the stock performed on day one, and that's all we remember. And that's all we're sticking to that. We're sticking to that headline. And we presume that is a missed opportunity and forever a missed opportunity, not realizing that a stock has permission to go up one day and down the next.
Oh, no way.
Yeah.
No way.
Did you catch that? Write that down.
That's the big takeaway. I've got a great question here from Pinto hanging out with us today. Are IPOs the same as stock shares? This is an IPO, Pinto, is the first time that the average investor who's not an insider can get it. So the shares have existed, but they're private. An IPO, an initial public offering, is the first time people like you and Farnoosh and I can buy the stock. So that's what an IPO is. Other problem I have with IPOs is that, you know, if you're going to invest in individual stocks, which I totally agree with you, most of us don't want to play that game. But if you are going to play that game, I prefer myself to deal with a company. There's tons of companies that already have quarters and quarters and years of data that I can go look at, because once a company's public, to Pinto's point, the other thing's going to change for this company, Pinto, is from now on, DoorDash and Airbnb every quarter are going to have to tell everybody what's up, right? They're an open book. And now I can go and I can look at all that data with DoorDash and Airbnb. Up until this point, Farnoosh, they really didn't have to tell us anything.
I recently had a guest on my podcast, Dr. Hans. He's the investing tutor, and he's dedicated his entire career. He's a self-studied, self-learned investor. He studied pharmaceuticals and pivoted to investing because he was so enamored by the whole world of investing. And he said to me when I was talking about my Party City stock, he was like, I was like, I did right. I made money with this stock. What do you think? And he's like, all right, well, maybe you just got lucky, but let me ask you this, or let me tell you this. When you're investing in any one particular stock, you have to answer a couple of questions. I don't remember all the questions, but one of them was, do you see this company having a strong future? You know? And he's like, what do you think of Party City? Like, does it have a strong future? Like, do you have any signs already that show that there's growth, that there's, expansion, that there's an evolution to the company? And I was like, they sell balloons. I have no idea. I think maybe an acquisition is in its future, but the web experience is crap. The store experience is not fun, but it's like a necessity. Like, everybody needs balloons, and you can usually you can't order balloons online with helium in them. Like, you have to go to a store to get that or buy the tank. And so I think like right now it's hitting a moment. It's solving a problem that we have now, but forever, I don't know. And I didn't think it through. Okay. I was, like I said, I was in line at the store. I saw a ton of people. I got a little speculative and I saw the stock was $1.80. I was like, how much lower could it go? It did. And then it went up again, right? Now it's at like $5.30 a share. But you have to ask that question. Do you think that DoorDash has a future? Do you think that Airbnb has a future?
Well, and I also remember hearing some of these, people that do stocks all day, every day, and they talk about what did as pulling the trigger when you were still at the top of the funnel. The first thing is to go, hey, Party City, I really like this. This seems like a great idea. And then dig into all of the, where have they been?
Right.
What are they doing?
Right. And I looked it up and I saw that, well, one, the stock price was so low. That was attractive. Two, I had just seen that some investor had commented, basically eliminated all their debt. So their balance sheet was in a much better place. And I just thought, well, okay, they're hitting the ground running in 2020. They're busy, they're relevant, they have no debt. They had reached like $7 the year before. So there was like a potential for growth. I'm not betting the farm on it, but I did a little bit of digging and, this is my first time really investing in a stock and that I'm actually following it and talking about it. I've never really done this.
That's interesting. One of my first individual stocks was Eli Lilly. And the reason I invested in them was kind of the opposite of what you did, which is that they had just announced some horrible news, like some absolutely horrible news. They had a drug that didn't meet the standard. And so the stock went down maybe to 25 or 30%. This is a long time ago. And I had the opposite thought, Farnoosh, which is that they're not going to go out of business. Outside of this drug, they're still making money hand over fist on all these other drugs. So once we get out of this crappy moment, if it just goes back to doing business the way they used to, I will make some good money. And sure enough, in 9 months, I sold out because I don't like buying many individual stocks, and I've made a nice big profit. The other horrible thing, it seems like I like to invest on misery, which is maybe says something about my psychology. But when there was the awful typhoons and the huge issues that hit the Indian Ocean, and all those people passed away from these monster waves. I don't know if you remember that. The Singapore Stock Exchange went down along with the entire Pacific Rim, and Singapore is sheltered by a bunch of barrier islands. It was not hit like everybody else was. So this big shipping center wasn't hit. I do not like, by the way, just to be clear, I don't like investing on people's misery. I do like investing on people's stupidity, thinking this is a good time to sell your stocks, which is what happened. So I wanted to invest in the region. My goal was not to take advantage of people dying. My goal was to take advantage of morons selling during this whole thing. And, and same thing, investing in Singapore, in the Singapore Stock Exchange, which sounds so exotic, but it really,
how's that going?
It went very well. I mean, this was a long time ago, and I only held it for 6 months again. Because I don't like
taxes on that, like a pretty big tax bite on that.
Yeah,
right?
But you don't let the tax wag the dog, right? I mean, I would rather have Bill Gates' tax bill than mine. So if I can have Bill Gates' tax bill, let's do it. So yeah.
If it's a big enough chunk, and if you think, my husband's like, you need to sell that Party City. It's at $5 now, and I'm like, but I've only had it for 5 months. I'm gonna pay like basically all my income tax on that, and then it's like no fun.
But
I'm not living off this money, so I'm just gonna see what happens. Like and Dr. Hans, my investing tutor friend, I emailed him. I was like, I should hold on to this, right? Just because the taxes are going to be really painful. He's like, yeah, just hold on to it for at least a year. Then you're going to go down and then you just pay capital gains and
or just hold it forever.
Or forever.
Live off a Party City.
Listen, I'm going to buy a house in Hawaii on this stock. I'm going to have a party on this stock. Let me tell you.
You'll be Farnoosh, the Party City.
Pay for my daughter's Sweet 16 or something.
And you should get free balloons. You should walk in and say, do you know who I am? I own this place.
I made you guys. Okay. I talked about you so much on my podcast and on Money with Friends.
Hello.
I at least should get a free helium tank.
People are, I would think so. In just a second, you're going to get Farnoosh's very free takeaway from what we talked about today. But first, want to say a big thanks to people who used our link when they went to NordPass. You know, having a password manager was not something I liked at first. I thought that was it just seemed kind of dumb. I'm like, hey, if I come up with 2 or 3 good passwords, and then Farnoosh, they make you change your passwords every 6 months, and then I forget what the new password was, and then I'm resetting my passwords all the time, and then Cheryl's mad at me because she's like, why are you messing with our passwords all the time? And I'm telling her that I'm not. Guess what NordPass did? We remember one password. NordPass comes up with a bunch of passwords that I don't know. I don't know any of my passwords, and these passwords are passwords I would have never come up with in a million years. And Cheryl, all she has to do and all I have to do, log into NordPass, click the link. All of a sudden, in one click, I've got all my passwords and I'm much more secure than I used to be.
Beautiful.
Super stuff. Head to nordpass.com/MWF. And now you can unwrap your NordPass Christmas discount. You spin their discount wheel to see what yours will be if you go to nordpass.com/MWF. That's fun. Not as fun as getting a podcast for free. You're welcome, people, that we're doing this for nothing. But Farnoosh, as the icing on the cake, the wrapping on this present that's today's episode, what's our takeaway today?
The takeaway, I think, is IPO news is interesting. It's interesting insofar as you can learn about these companies' journeys, tells you a lot about what makes a company successful and the ups and downs. There's excitement. It's, people's jobs also, that they're going to be able to ride this and, maybe earn some cash in on some of their stock, those who work there. But as a personal finance story, as far as like what to do on this news within my portfolio, or I think that's taking it too far. I don't think that this is the type of headline that you make money moves on. Personally, I understand that people are interested in investing in stocks, but IPOs are typically very volatile in their first year. And IPOs, again, are companies that are releasing their shares to the public for the first time. And yeah, the first day they'll pop probably, but like any stock, it's going to go up and down and around. And it is, you look back and you see how these stocks perform, and, maybe you feel like you missed out on the first day, but the general public usually can't invest on that first day. It usually goes to, I don't know, institutional investors or, Tiger Woods, like you hear about those people who got in on Facebook, and it's like, you can't get in on Facebook. Sorry.
You got to get in ahead of time.
Enough. You're not cool enough.
You got to get in ahead of time. And I think that's my takeaway, is that an IPO is more about the founders finally chinging the cash register than it is about you.
Yeah. Making billionaires out of founders. That's
absolutely. It's a great day for those people. For you, you're about to invest in a company that has no public data, everybody's excited about, and over the next month, who knows what's going to happen. So for me, IPOs are something generally to avoid. I'm with you, Farnoosh. Avoid the IPO, wait until there's some data, then get in.
Wait for a stock split.
Right. Wait for some big event, or just take all your money and invest it in Party City. I think that's probably the
glad
takeaway.
that we came to that conclusion.
Or maybe not, but
you've been listening.
There is this rumor going around, Farnoosh, that you have this incredible podcast where you talk to this guy, Dr. Hans, the investing tutor, and other crazy people. You talk to Suzanne Summers. Yes, Suzanne Summers,
Chrissy Snow from Three's Company, my favorite show from all time. Yeah, we have a lot of fun over at So Money. You've been on the show talking to interesting people from, obviously investing experts to actors, comedians, entrepreneurs, everybody about their money experiences. We've all had them. And then Fridays, I answer listeners' questions on the Ask Farnoosh part of the week. It's a 3-time-a-week show, 3 days per week. And it's a lot of fun. And I noticed somebody here, Lisa, or was it Lisa? Or
yeah, it was Lisa.
She was listening to my podcast on her phone, got a live alert that I was here with you on YouTube. So here she is. So It's nice to know that our audiences overlap.
Follow you around. That's
Yeah.
awesome. I take you on my walks, so
That's nice.
it's a good time laughing with Farnoosh and whoever she's on at that time. Speaking of laughing, Farnoosh and I are going to be back tomorrow laughing about, well, maybe not. This is kind of controversial. You've done a great job at work. Everything's going great, but there's this horrible pandemic, 11 million people out of a job. Should you ask for a raise? One person who writes for USA Today says, no, we might have a different opinion, but you'll have to wait till tomorrow to find out. She's Farnoosh. I'm Joe. We'll see you tomorrow back here at Money with Friends. Bam. Up team.
Great.
Good
By
work.
the way,
and
I
Brian,
have a hard out
not-
at 11:15. Is that okay? It's
We're going right
10:45.
now. Let's go.
Okay.
You ready?
Yeah.
Let's do this. I need to be done before that. So, and we went long just because we were having fun, which never happens with us. We never have a good time.
By the way, you should watch How To with John Wilson on HBO. It's so funny. You would love it.
Really?
Yes,
I
it's a
haven't even-
docuseries. This
haven't
guy
even
is
heard
a
of it.
hilarious documentarian. I don't know who he's a one of a kind. You got to watch it. It's really good.
That's cool. I'm going to watch it today.
Really smart.
I just hope, did you hear much of this banging?
Not really.
Okay, good. All right, here we go. 3, 2, 1. So you're working hard. In fact, you're doing more than your fair share, and it's time for your review with the boss. Do you ask for a raise? With 11 million people without jobs, is that kind of the wrong moves? One USA Today writer infers that you should not ask for a raise now, but we might have a different take. Farnoosh Torabi's back, and we'll talk to the credit expert, mom, podcast host, author. What doesn't Farnoosh do on today's Money with Friends? Welcome back to the Money with Friends podcast, coming to you live from my mom's half-finished basement where we make the Stacking Benjamin show. I'm Joe Saul-Sehy.
I'm Farnoosh Torabi.
Coming to you from
Montclair, New Jersey.
Fantastic. This is a podcast where we're going to cover a recent story ripped from the financial press. Today, we've got one from USA Today. Today, we're going to talk about how to maybe do your job better or take advantage of your job better, monetize your job better. If that's not enough, we're going to share a big idea at the end of today's show you can take with you to be better with money, not just today, but from now on. Today's show is brought to you by Tiller Money. Keep your financial life on course, easily track your money over time, always know what's safe to spend, and confidently plan for the future with spreadsheets automated by Tiller Money. Get your free 30-day trial at tillerhq.com/MWF. We didn't scare her off. I wonder how you do all those things, Farnoosh, and you get to spend time with us. That's fun.
I don't know either. I'll tell you one day when I figure it out. The trick is, I don't do it all at once.
She's like 2 words, bourbon.
Right. That's 2 words? Oh gosh, all these years.
Yeah. Well, what you brought to the table a very interesting USA Today piece. Why did you pick this one?
Well, I love stories about how to make money, and I love to talk about making money. And there was a piece written for USA Today by Johnny C. Taylor Jr. recently about, should I request a raise during the pandemic? And his thesis is, no, you shouldn't. And what I really didn't, what bothered me is sort of about the conclusion that he came to. Well, one, he works in HR, so I felt like he was a little biased.
Why is that, by the way? Because explain to people where his bias would come from.
Well, companies are in the business of trying to optimize their revenue. And maybe, I don't know, I'm jumping to a conclusion. Maybe I'm assuming that he works for a company, or he's of a philosophy that, like, you know, raises aren't the things we just want to keep handing out like candy, because we want to like keep the books efficient, and we want to, you know what I mean? Like, there's a reason you have to, as an employee, ask for a raise. They're not just handing it to you. Like, they don't really like love doing this, is my take on this. Like, companies, you know, they're going to need some persuasion to
Sure.
give you more money. They have bills and they have other expenses, and usually they on the totem pole of expenses, like the human capital sometimes falls at the bottom, unfortunately.
But if you walk to your, but if you walk into your boss's office and you say, hey, I know that there's all these people out of work and I'm so happy I have my job and I think you should pay me more. Does that come across as, as,
Not reading the room?
yeah.
Yeah. I mean, certainly, I think that they're using the world that we're living in right. People are losing their jobs. Some people are getting hired. Some people are getting promoted. Like, let's look at the big picture. Let's look at every aspect of this world that we're living in. I mean, we just did a segment with you and I about companies that are IPOing in this recession. Like, it's not all doom and gloom. And if you have been working at a company where there has been growth, they haven't had layoffs, or even if they've had layoffs, but you've kept your job and now you're straddling 3 roles, guess what? You might be in a position now to earn more money, rightfully so. And it's not because you're greedy or blind to the world or lacking empathy. It's just that it's business, right? What I fear is that this sort of advice that this article is putting out there, it's sort of making people feel bad or guilty about their accomplishments, or not giving you permission to feel proud and accomplished and therefore justified in your request for a raise. There are better and not so great ways to ask for a raise. I would say, like, first things first, understand where your company is currently at. If your company is a publicly traded company, you can look up the last quarter and see where the growth is. And you can also look at sort of what you've been doing and how that's been contributing to the company's bottom line. If you work in a department where you're responsible for hiring or firing or optimizing the software or bringing in new clients or coming up with new project ideas, all of that has a trickle-down effect to the company's bottom line. So now it's your job to figure that out.
Well, and I was also thinking you can also look at places like Glassdoor to
Absolutely.
see how you compare.
For sure.
Do you even stack up with other people?
Right. And that's a first step, is kind of just see, like, am I even in the ballpark? And I would actually go to HR before you ask for a raise. Go to HR and ask this: what is my salary range or salary band? And a lot of medium to large size companies have this. And essentially what it is for every role, the company has budgeted a range of salary. So a starting salary up to like a maximum salary. Once you reach that maximum salary, they pretty much have to either like give you a new job or promote you. So they've sort of, that's the salary range for your position. If you're a senior analyst, you can make, let's say, between $80,000 and $110,000. Well, where are you on that range? That's what you're asking about. And what is the range? And you can then also go back and be like, okay, well, I've been at the company for 5 years. I've been killing it this year, and I'm still only making it the low end of that range. That's interesting. So it's about understanding, what is it going to take for my company to understand why they should invest more in me. And one thing I wrote about this earlier in the pandemic. And I think, again, if you want to be more cognizant of the times, because you're not blind, you say to your company, look, I get it if now is not a good time, but I'm going to continue my momentum. I have been bringing in the business and I'm going to continue. And I want you to watch in the next quarter, I'm going to hit these targets, or these are my goals, which are above and beyond what, my goals initially were, maybe at the start of the year. If I hit these targets, if I bring in X revenue, if I bring in 2 more superstar employees or what have you, can I get a 10% pay bump? Can I get a bonus? So attaching your promotion, your pay raise to a future win, for companies, that's a lot more, it puts them more at ease, because they feel like, okay, well, it's like, okay, now it's tied to something that I know is a tangible growth metric.
Well, what I like about that too is the fact that it's not based on my needs, it's based on what I can do for the company.
Right. You're involving everybody in that.
Yeah, I think too many people go in and ask for a raise and involve just, hey, I need a bump because I can't make my car payment, or whatever it might be, where the company really wants to know what you're going to do for them.
Right. Yeah. I wouldn't bring up so much the fact that, and even if it's true, you have a spouse who lost her job or his job, or now you have to pay for childcare. Like, that's not what you lead with. If
Yeah.
anything, you're really leading with, again, if you are on the other side of this negotiation, i.e. your boss, what does your boss need to hear to then go to his or her boss and
Right.
advocate for you? Because that's usually what has to happen.
Well, that's a good point too, because your boss a lot of the time is on your team, but isn't the final decision maker.
Right. Right. They
Yeah.
have to go to HR, they have to go to the CEO, or they have to go to the VP.
Give them data. The other thing I think to think about too is that, yesterday you and I talked about Airbnb and DoorDash, companies that because of the things going on are just killing it. If I'm working in DoorDash especially, Airbnb avoided being annihilated by making some good moves.
Yeah.
And some tough moves. So I wouldn't say Airbnb was killing it, but DoorDash certainly, Farnoosh, is just, yeah, fantastic for them. But if I'm at that type of company that's rocking during this time, and I'm a superstar performer, then I think certainly, talk about reading the room, room, I shouldn't feel bad at all. I should feel like, listen, we're doing a valuable service for a lot of people right now. I'm one of your key people. I really want to stay. Let's talk more money.
Right. And everything I've heard from companies right now that are successful or are thriving, why is that? Because they accelerated and put on the gas pedal so many goals and initiatives that they wanted to achieve in the next 5 years. They did it this year. Yeah. And so who was part of that? Like you were. If you were there, you were helping them accelerate their goals by 5 years. And that's worth something. And if that acceleration worked and you're benefiting from that already, look, it is, of course, you got to marry sort of like the world that we live in, but also business. And sometimes when we work for a company, we forget the business side of things. We get very emotional. We start to just feel like we're just happy to be here. I'm happy to have a job. No, you are playing a role that is helping a company make a lot of money.
You've talked about these statistics too before, which is, let's talk gender. Women also much less likely to ask for a raise than men are.
Yes, I think because we just have less practice with it. We haven't had a lot of women mentorship. Historically speaking, men have been working for a lot longer than women in these types of situations. Men are more experienced, and so it comes more second nature to them. Whereas for women, I feel like a lot of us still feel like we're just happy to be here. We're happy to have the job.
Right. Don't want to rock the boat.
We don't want to rock the boat. And so we play it nice. And we think that, we would just want to not rock the boat, but yet, we don't realize it's just business.
Yeah.
It's not about gender. If you're putting in the work, you should get rewarded for it.
I'm smiling because when you say it's just business, I think of one of my favorite awful lines from a movie, which comes from Wall Street. And it was when Gordon Gekko, the evil character played by Michael Douglas, says, "This is business. If you want a friend, buy a dog." And I immediately, you maybe don't have to be that rough. Maybe not
that rough.
Maybe.
Yeah.
Put a little velvet on that hammer. Hey, in just a second, Farnoosh and I are going to have our takeaways from today's discussion about asking for a raise during the pandemic. First, want to say a big thanks though to everybody who used our link when they've gone to Tiller Money. I think that it's funny. So many people think that a budget is constricting, but really a budget gives you the ability to have some fun today and some fun tomorrow. What I like about Tiller is instead of many of the apps out there, which have some things that I like and some things I don't like, Tiller, because it's based on spreadsheets, I can do whatever the heck I want. So if I don't like a line, I can get rid of it. I prefer to have a spreadsheet that's really kind of, this might not be the way Tiller wants me to present it, but I like a spreadsheet that's dumbed down. So for me, I always simplify my spreadsheets. Now, I know a lot of the money nerds paying attention to this, Farnoosh, they're the opposite. Like really, I can have a spreadsheet where I can dice this data 57 different ways. You know how much lettuce I buy on Tuesdays? I can do that with Tiller. For me, I can just see what the grocery bill is once a month. So to check it out, to get your free 30-day trial, head to tillerhq.com/MWF, tillerhq.com/MWF. Peter Polson, by the way, the CEO of Tiller, was on our Friday FinTech segment on the Stacking Benjamin show recently, talking about how they're participating. They're one of the first companies to use open banking, which is this idea that, you know how you know how when you'd use these third-party apps, you always have to give them all your login stuff.
Yeah.
Now, Citibank and Chase, the first two banks that are making it a one-way street, where I can just say, "Hey, Chase, let Tiller know my stuff," but now Tiller doesn't know. Tiller wasn't doing anything with your stuff before, but yeah, we're going to see finally some innovation where we can use different apps and stuff. So, and to see companies like Chase and Citi using this first shows kind of hopefully where open banking's going. Let's talk about where this segment's going. Farnoosh, how about that for a transition? What's our takeaway today?
Takeaway is that if you feel as though you have been going above and beyond at work and you can prove it, you have data to back it up, and your company is doing fairly well, relatively well compared to maybe industry peers, it's a fine time to ask for that raise. And if you're not going to ask for it, guess what? They're not going to hand it to you. So it's really your responsibility. Now, there is something to be said about that. We're living in a recession and many people have lost their jobs. And if you're at a company where it's clearly things are on the decline, you know, obviously, like we can use common sense, but to make a blanket statement that it is just because it's a recession or just because it's a hard time for a lot of people, that it should mean that you should just stay quiet and keep working like a dog. I don't think that's fair. I don't think that's right.
Well, and I love that takeaway. And my takeaway is going to be something kind of completely different note. So I'm not going to do what I did yesterday and just ape onto yours and go, what Farnoosh said and more from me. Mine will be something different, which you brought up earlier, which is watch out, think to yourself whenever you read anything, who's the author and what's their point of view. And I think when you can recognize, and this is the same thing you said about your boss, the second you can recognize your boss's point of view in the negotiation for a raise, also the second that you read something and you can see the point of view of the author. I like playing a game when I watch CNBC or Fox Business, when a guest comes on and they're telling me that gold is a great time to buy gold. You always know it's going to be a gold fund manager. Or somebody says, now's the time to buy bonds. Well, it's a bond fund manager. It's always a good time to buy whatever this person has. And so you got to kind of, don't discount everything they say, because these are some smart people, but understand the point of view. And clearly today here as a HR manager, there might be a point of view. Speaking of somebody with a point of view, Farnoosh has this amazing podcast. It's called So Money.
It is. You said that like you didn't know. It's called So Money with Farnoosh Torabi. It's been going on since 2015. Come join the ride. It's a lot of fun. People like Suzanne Summers, which I know is all you can talk about, Joe.
It's all I can talk about.
The show. I bought a Thigh Master since then.
You had to.
Very convincing woman.
You were contractually obligated to buy one, I'm sure. She's like, I'll come on the show if you buy a Thigh Master.
Listen, I'll buy 10 of them. She was a great interview. Queen Latifah, Tim Gunn, Joe Saul-Sehy, all these amazing characters coming on the show talking about their financial wins, losses, experiences. It's a bag of fun.
I'm not sure how tough it was stooping to Queen Latifah after I was on, but man.
It's hard to fulfill.
Got to do it. Go listen to So Money, everybody. And we will be back here tomorrow, Bobby and I, with the weekend show, wrap up of all things this week, preview next week. We'll see you back here next time at Money with Friends. Bye-bye.
Bye.
All right. We lost your microphone just before the end, but we were so close to the end that you're coming through the, you're coming through the, it was.
Oh, you know what? I accidentally unplugged my microphone. I thought I was unplugging my phone from my computer. I'm sorry. We are done anyway. So thanks everybody. Farnoosh and I got to go. We've got, unfortunately, other stuff. So I hate to podcast and run, but thanks for hanging out. Bye-bye. Thank you. Bye.